The word asset means anything of value, and the great thing about anything valuable is that money can be borrowed against it. In banking terms, this is denoted by the phrase loan against. So, loans against property, against fixed deposits, insurance policies, loan against mutual funds. I've covered this in a previous video, against bonds, against gold. And what I wish to cover in today's video, that is loans against shares. Actually, things like shares, mutual funds, PPF bonds, etc. These are all financial instruments, so they come under this umbrella of loan against securities. But because a lot of you are already into direct equities, I'm isolating just the loan against shares feature as we go into the details of it. Let's begin. Right, so loans against shares, or LAS as I like to call it, comes under the domain of secured lending. That is, we borrow money from a bank or NBFC keeping our shares as collateral. This way, the borrower doesn't need to liquidate one's equity investments, and the borrowed money can come in very useful during emergencies, short-term working capital, home renovation, funding tactical opportunities like an IPO, tax payment, vacations, etc. Now, because there is some collateral involved from a borrower's perspective, it generally means a lower interest rate as compared to unsecured loans, quick processing and disbursal, flexible payment options, higher loan amounts due to collateral backing, minimal documentation as compared to a personal loan or credit card, and no prepayment penalty in most cases. We'll cover all of these benefits in greater details, but the question that comes to my mind is, which shares? While loan against shares is a generic statement, it doesn't mean all kind of shares apply to it. There are restrictions in the sense that LAS doesn't apply to partly paid up shares. Physical shares are an absolute no. Shares that have a lock-in period and even those under a minor's name are not accepted under the scheme. And not just the type of shares, in fact, the stock, the shares of the company you hold, even that might not qualify under LAS. And that's because the RBI, the Reserve Bank of India, only permits a particular list of Group 1 securities to be collateralized for a loan. On top of this, different banks and NBFCs have their own parameters and risk management policies, leading to a more curated list. For example, this here is the approved list of Zerodha Capital, which as of last month had some 750 approved stocks. Axis Bank has some 580 stocks, while ICICI Bank has 700 stocks in their approved list. That said, and pleasantly, as a borrower, you do have the flexibility to decide which company shares and the number of shares you'd like to pledge. This is something I'll demonstrate a little later in this video. Now, understandably, the loan, the amount one can borrow against the shares, depends on the share's market value. It's also called the LTV, loan to value, which represents that percentage of market value that the lender is willing to offer as a loan. Again, different institutions have a different number. Mirae Asset offers an LTV range of 30 to 45%. Zerodha does it at a steady 45%, while most banks offer an LTV of up to 50%. So let's assume 50%, which means if the current value of your securities is 10 lakh rupees, then 50% of that, so an amount of 5 lakhs, can be borrowed against it. Why is this 50%, not some other number? Well, it's because of RBI rules that require every last borrower to maintain an LTV ratio of within 50% during the loan's tenure. Now, obviously, the V in our LTV ratio, the value of the shares, is always fluctuating, and therefore every lender makes it a point to calculate the revised LTV ratio at the end of each trading day. Actually, let me explain this with an example. So, say I have shares in Asian Paints worth some 10 lakh rupees as of today morning. I've done an LAS, borrowed 5 lakhs against it, which gives me an LTV of 50%. Now, at 1 o'clock in the afternoon, news comes in that Mr. Trump has applied a tariff of 30% on paints imported into the US, and as a result of this, the stock price of Asian Paints drops by some 10%. So essentially, what was 10 lakhs worth of shares in the morning is worth 9 lakhs by the end of trading day, which means our LTV is no longer 50%, it has now gone up to 55.5%. Since 55 is above what the RBI mandates, I'll have to bring the LTV down to 50%, which means I have to either pledge additional securities or I can repay some part of the outstanding principal. The borrower gets about 7 days to make good on any such shortfalls, and during this period, one can expect the lender to continuously notify the customer via emails, WhatsApp messages, and automated phone calls. Let's look at the minimum and maximum limits offered, and again, different institutions have a different number, with the minimum going as low as 25,000 rupees, while the maximum limit goes up to a few crores, as one can see in this table here. In fact, I was surprised to see that ICICI Bank and also Axis Bank, these guys offer a maximum limit of only 20 lakhs, which I thought was a bit conservative. Maybe their priorities are elsewhere, but generally you'll see NBFCs offering a pretty liberal and high loan number here. Remember, the dynamic LTV ratio calculations does apply here, and lending institutions can and do regulate the maximum loan amount depending on how the market is behaving. Now, lending institutions offer two types of credit facilities. The first one is a straight up cash dispersal, kind of a term loan wherein a fixed amount is disbursed upfront for a specified tenure. This is the preferred method for NBFCs. So players like Bajaj Finance, Zerodha Capital, they would deposit the amount into your bank account typically within 24 hours of you making the request. The second type of credit facility is something that banks often do, and it's called an overdraft facility. Very simply, it's nothing but a revolving credit line against pledged shares, which essentially means the borrower is given a greater flexibility in managing his or her withdrawals and repayments within the sanctioned limit. समझ नहीं आया ना? Okay, so say a bank, after evaluating your equity portfolio, offers you a limit of 50 lakhs. So this is your maximum overdraft limit. Assuming today you need some 15 lakh rupees, and because this is within your sanctioned limit, you can borrow this money and use it in the way you like. Then 10 days later, your customer pays up, you receive 8 lakhs from somewhere, which you then deposit into your overdraft account, bringing down your outstanding loan to 7 lakhs now. Then again, you borrow 5 lakhs on the 20th day before repaying off the entire outstanding of 12 lakh rupees on the 35th day. The important thing to understand here is that you won't be paying an interest on the entire 50 lakh limit unless you're borrowing the entire overdraft. Like in this case, you'll be paying interest, and let's say this interest is 10% per annum. So you'll be paying a prorated 10% on 15 lakhs for 10 days, plus an interest on 7 lakhs for the next 10 days, and finally one needs to pay interest on 12 lakhs for the next 15 days. So that's what you pay. There's flexibility here, and this flexibility is there in both methods, cash dispersal and overdraft, and depending on what you need, you can opt for either of these. Right, so when it comes to the interest rate, this number is typically between 10.5% to say 12%. That's where most of the LAS lenders are at currently. This interest rate is a flat rate, of course it's annualized, and as I explained it in an earlier example, the interest is calculated on the daily outstanding balance. So day 1, day 2, day 3 until day 30. So the entire month's interest is then accumulated, which the borrower needs to pay early next month before the assigned due date. Any lapse in payment, that is, if the interest is not paid, or even if it's partially paid, it amounts to a default, which means firstly, a penalty will be levied on the defaulted amount, and secondly, this information is sent to the credit information companies like CIBIL, Experian, etc. And a frequent/prolonged default behavior is likely to reduce the borrower's credit rating. So the moral of the story is, even if you can't pay the principal, always pay the complete interest on time. Related to interest rates, another comment I often come across is this one, comparing LAS with personal loans, where someone will pick up an isolated fragment like, oh, the interest rate on personal loan is only 9.9% and will blow the trumpet around it. Such outliers are pretty rare, and the fact is, across a larger population, a personal loan will always be more expensive than a loan against shares instrument. The reason is very simple. A PL is unsecured. It's money borrowed without any collateral, while here we are talking about pledging our shares to borrow some money against it. Beyond the interest rates and collateral, LAS can run into a few crores, while personal loans are restricted to a few lakhs. LAS is a lot more flexible, as we learned earlier, while a PL is rigid with fixed EMIs. With a LAS, no collection agent is going to hunt you down, although I won't say the same for a personal loan. And yes, LAS requires very little documentation, while personal loans will need income statements, credit reports, identity proof, address proof, and a few other documents. The point I want to emphasize here is that a LAS, a personal loan, home loan, working capital loan, all these should be looked at as different species, and one can't really generalize them under a single head to suit one's narrative. So watch out for that and do what's best for you. Let's quickly look at the charges as well. This is in addition to the interest rate, and believe me, there are a bunch of them. First up, there's a loan processing charge. This can be as low as 0.25% of the loaned amount. In some cases, it's even a fixed number and can go as high as 2% of the sanctioned limit. Then there's a renewal charge, which is expensed every year. This is generally a fixed amount, 3,000 rupees. There are penal charges. Remember, I spoke about it earlier, and this can be as high as 18%, even more in some cases, and is charged on the overdue amount. And that's not all. There is a pretty long list with some lenders charging a confiscation fee, some have a pledge creation charge. There's also an unpledging charge. What else? Prepayment charges, stamp duties, GST, legal charges, collection charges, etc. Unfortunately, you and I can't do much about it, but please be aware of these charges and to the extent possible, try to avoid whatever is avoidable. Right, so let's open a loan against share, a LAS account, shall we? Now, the good part is, thanks to a marked improvement in our country's digital infrastructure, many things like verification, collateral management, disbursement, KYC, risk management, etc., these have all become a lot faster, efficient, and automated, enabling banks and NBFCs to onboard a customer in a matter of minutes as compared to the many weeks it used to take earlier. In fact, when I opened my LAS account with Zerodha Capital, the entire process took me less than 10 minutes. It started with me entering my Zerodha credentials, user ID, password, the mobile app code, then sign up to Zerodha Capital Private Limited with my mobile number and email ID. I then did my KYC with DigiLocker, both the PAN and the Aadhaar. I'm blurring out most of these parts so that YouTube doesn't pull out my video again. Next is bank verification, which was done using my UPI ID. I filled in some details like the city of birth, FATCA declaration, marital status, mother's maiden name, etc. I was then presented with a dashboard which clearly explained the interest rate, 11.5%, the 18% penal charge, and most importantly, the amount of loan I could apply for, which, as on the day of recording, was a little over 36 lakhs. Towards the left, all the eligible securities are displayed. I'm showing you only 5 of them. And this amount you see, 6,61,000, this one's Himadri specialty. And this number is exactly 45% of the market value of the security, substantiating Zerodha Capital's 45% LTV ratio. Towards the bottom, there's also a list of approved securities, which gives us eligible companies and the haircut, that is 1 minus the LTV percentage. I then modify the entry seeking a loan of 1 lakh rupees, click on continue, and I'm presented with a fact statement which has the list of charges, etc. And look at this. Although I had asked for a loan of 1 lakh rupees, some of the charges I had talked about, the stamp paper, processing charges, GST, etc., all these charges have brought down my final disbursal amount, and I'll receive only 99,117 rupees in my bank account. So that's a haircut of about 0.8, 0.9%, which isn't big, it isn't small either, but it's always good to know these things. The page continues to list down additional fees like confiscation charges, penal fees, pre-closure charges, etc. I then confirm the loan, enter the purpose of loan. Next is the e-sign, which seems like some long-winded legal documentation, and again we use the Aadhaar for electronic signatures. We then have the e-pledge followed by the video KYC, and that's it. I was onboarded in a matter of 10 minutes, and the money, the 1 lakh I had applied for, was credited to my bank account the very next day. Actually, not 1 lakh, it was 99,000 something, which is net of stamp paper, GST, etc. While in this case, I went with Zerodha Capital, and that's purely because my trading account is with Zerodha. I'm pretty sure other players have a similar process, at least digitally, and because all our shares are logged with the repositories, CDSL and NSTL, I don't think one needs to match Zerodha with Zerodha or ICICI Bank with ICICI Direct, etc. So look around, try and find the best deal for yourself, and I'll appreciate it if you can let me know in the comments how your onboarding experience was. All right, let's look at a few more pressing questions. Okay, this is a good one. So what happens if the LTV is not brought down? I hope you remember there are a couple of options. A, you can pay some of the capital, and secondly, one can add some more securities to bring down the LTV. Now, if both these options are exhausted, then I'm afraid the lender will have no alternative but to invoke the pledge and liquidate the securities. This liquidation can be done partially or fully, and of course, a confiscation charge will also apply here. In fact, let me give you the scenarios where a confiscation is triggered. Of course, this might vary from lender to lender, but generally it happens when the LTV exceeds 60% even for a single day. Also, when the LTV doesn't exceed 60 but it remains above 50% for a consecutive number of days, maybe a week. Confiscation is also triggered when interest hasn't been paid for a few months, maybe 3 consecutive months. And lastly, when the loan's tenure has ended and the outstanding loan is still not repaid by the due date. Okay, next question. Will I receive any dividends or bonus on my shares during the time it is pledged? Yes, absolutely. The borrower, who is also the shareholder, will continue to receive all forms of corporate actions. This includes dividends, bonus shares, stock splits, rights issue, and also buybacks. Although I did read somewhere that buybacks might require the lender's consent to tender shares, as the proceeds would reduce the collateral's value, leading to a recalculation of the LTV. Okay, this one. Okay, what should I do if I want to sell my shares? I'm guessing sell my shares means how to sell a pledged share, and the only way one can sell that share is by unpledging it. Don't worry, the process is not difficult, it's all online, but it might take up to 3 days for the unpledging to happen, although some players can do it within a day as well. But remember, the lender will unpledge a security only and only if your loan to value ratio, your LTV ratio, is within the permissible limit of 45%. So please watch out for that. Can loans be foreclosed? Yes, absolutely. LAS is extremely flexible and the loan can be foreclosed and prepaid at any time per your convenience. Generally, there aren't any charges for prepayment or foreclosure, but this might vary from company to company, so do read up a bit on that. In terms of how to repay, most companies have a website, a servicing portal, so UPI, net banking, NEFT, RTGS, all this should be available there. And if you prefer offline, then there's cash and also checks, assuming you're still using those pieces of paper. Cool. So these were the questions I had. I hope this gives you a better understanding of what this lending product is all about. To quickly recap, LAS comes under the secured lending umbrella, helping you unlock the value of your investments without breaking the compounding engine. The product works a lot like a credit card, so you don't pay any EMIs and can revolve the balance by just paying off the interest. Lenders typically offer an LTV ratio of between 40 and 50%, but remember there's also an approved list of securities. The interest is generally between 10.5 and 12%, but do be wary of the charges. There are a bunch of them. And one can avail LAS completely online now for loans as low as 25,000 rupees and for as high as 10, 50, even 100 crores. In my view, the modern LAS is largely a product of digitization, perfectly aligning with the explosion of demat accounts in our country and the improvement in India's digital infrastructure and ecosystem. These two factors have led to a greater adoption of loan against shares, which as of August last year was around the 10,000 crore mark. And it is my belief that this will grow at a much faster clip over the next few years, with retail investors like you and me also taking benefit of it. So that's all I have for this presentation. I hope you liked it. Do share it with friends who you think might benefit from this information, and I'll see you very soon. Until then.